How SBA loans finance a business and a building together. And if you're buying a business, you're not just acquiring cash flow. You're often stepping into a real estate opportunity as well. And the smartest buyers understand how to structure SBA financing to acquire both the business and the building, creating long term control and stability and wealth. And this is where the Small Business Administration or SBA loan programs come into play. Specifically, their SBA 7A and the SBA 504 structures. So the core strategy here is to control the asset and control the location. And when a business owns its real estate, you're stacking two wealth drivers. So you have an operating business for cash flow, and you have a real estate appreciation component and rental stability for the building. And this is why these deals are highly attractive and why lenders are willing to finance them. So let's talk about SBA 7A first, flexible financing for business and real estate. And the SBA 7A loan is the most versatile structure in small business lending. Some key features is that it can finance business acquisition or real estate if owner occupied, as well as working capital and equipment. And the loan sizes are up to $5 million, and typical down payments are 10 to 15%. And the amortization for a business alone is up to 10 years, but for real estate portion, it's up to 25 years. So when to use it? When you're buying a business where the real estate is included. And if you need flexibility in structuring the deal and want one loan instead of multiple layers. So the bottom line is that SBA 7A is ideal when the business is the primary driver and the real estate is just part of the package. Let's talk about SBA 504, the long-term real estate play. And the SBA 504 loan is designed specifically for owner-occupied commercial real estate. So let's break down that structure. 50% is a bank loan, 40% is from an SBA CDC-backed second lien, and 10% comes from the borrower's equity. Larger down payments, but as little as 10% are available, and there's a fixed rate component on the SBA portion. It gives you 25 years financing, and you must occupy 51% of the property. And these are typically used for office buildings or industrial facilities or medical practices. And the bottom line is that SBA 504 is a real estate first strategy, and it's ideal when the property is the core asset. So down payment reality. Most buyers are surprised by how accessible these loans are. And some typical equity requirements for a 7A is 10 to 15% down, and 15% is generally when you're constructing or renovating. But SBA 504 is 10% down and can increase based on certain risk factors. So compared to conventional commercial loans, often 25 to 35% down, SBA programs create a massive leverage advantage. And this is why these deals attract buyers. They lower the barrier to entry while also preserving the owners and businesses' liquidity. So why these deals attract buyers? Well, there's lower cash required, and buyers can control both the business and the real estate with relatively minimal equity. 2, there's built-in rent stability. So instead of paying rent to a landlord, you're paying yourself or another business entity that you control. 3, there's exit flexibility. Future buyers can also use SBA financing, which creates a built-in exit strategy for you. 4, since it's a government-backed loan, there's strong approval odds. And lenders like stable operating businesses. They like owner-occupied real estate. And more so, they're like predictable cash flow. And these deals check all 3 boxes, both for the bank and for the buyer. So the strategic insight here is that structure is going to beat rate, and most borrowers focus on interest rates. And smart borrowers will focus also on loan structure, cash flow coverage, and exit strategy. And SBA financing allows you to preserve capital on the way in, but also lock in long-term occupancy and build equity in 2 places. So the final thought for the day is if you're evaluating a business acquisition and there's real estate involved, don't treat them separately. And the real opportunity is combining them into one strategic financing structure. And that, my friends, is how you reduce risk, but also increase control and maximize long-term returns. That, my friends, is it for the day. My name is Bill Rapp. My website is billrapponline.com. If you go there, you can figure out how to schedule a time with me. Love to talk to you more about your situation and how we can better it. Have a good day.